Okay, good morning, everyone. I hope you had a wonderful Monday. Today is Tuesday, on the 9th of of April, 2024. Let me just do this. So, remember that I told you yesterday that usually Tuesday there's a lot of manipulation. I mean, it's a Tuesday. Usually I don't trade because it will be consolidating almost the entire day, and also that because tomorrow, I mean Wednesday, it's it's CPI week, so I know that currently the market will wanna just uh generate liquidity, create liquidity pools. Then on Wednesday, CPI is either is gonna go for those liquidity pools or it's gonna be used for distribution. So currently, what's going on is that this is my 1 hour. Remember yesterday I said I really would have liked if this buy side liquidity was raided, then heading into this fair value, this inversion fair value gap, right? So what do I mean by that is that I wanted maybe to like go to the upside. Nah, let me just remove this. Like take out liquidity, go to this fair inversion fair value, right? Then so this is what I would have liked to happen. We don't know whether it will happen or what. I'm saying this is what I would have liked the market to do than heading for this daily buy side liquidity. You understand? So it for me personally, this is the this is what I would like the market to do, right? Because you can see now the market has been what? So making this high here and this high here, those are my relative equal highs. So meaning this liquidity, maybe rating out this liquidity, heading into this fair value and continuing to aim for this buy side liquidity. So let's say yesterday, because let's say yesterday I entered. I'm gonna show you. Let me say maybe I would like scalping, but I wasn't really trading yesterday. I was just looking at the market and seeing like what was going on, what was Monday really doing. So there was a lot of consolidation, and if you can see, né? This is the open. Yes, this line here, right, is the opening of the new week. Look at look at the board. It kept on playing up above the what? Above the new week open. You see that? So it's like kind of like showing me that okay, we are bullish. So meaning we are aiming for this two guys here. So let me say if it was Monday, let me say if I were to trade Monday, firstly I would know that okay, as I said it before, this was my draw on liquidity, right? This is the high that I would have liked the market to take out. So we would go to my 15 minutes time frame. Usually when I trade, I use the 15 minutes time frame to get those highs and lows. And someone had was asking me, what is this line? This line, let me just go to my 4 hours. No, 4 hours. Yeah, let me go to 4 hour time frame. It's not showing. It's not giving. But that entire line, you saw that this line there, it's the midpoint of this entire fair value, this 4 hour fair value gap. So like it's not even showing you whether the market wants to continue to the buy side or it wants to retrace back into the sell side. So when that happens, we just have to wait. That's why I want to see liquidity being rated first. So let me show you if I were to trade Monday, knowing that I'm looking for this area here as my buy side liquidity, right? So firstly, what I would do is that I'm gonna look from 8 from 8 p.m. to midnight. That will be my Asian range, right? So there, where's the high? This is the high, right? In this entire range here, where's the highest high? It's this one. And where's the lowest low? It's this one. In this range here, this is the low, right? So this will be my Asian. This is actually like a strategy as well that you can use as well. So this is my Asian range high. So from there, what do I look for? I want to see what does London do. So if London session is from 8, I mean from 2 a.m. until 5, which is around here. During this London session, what does London do? Listen, during this session here, right? During this, remember, I know that the market is drawn to what? The market is drawn to this here, right? That's like my draw on liquidity. So this is London. So London did a high, took out this um ascent range high, but did not break above it. If you can look at that, the body did the damage, but I mean the wick did the damage, and the body was below this Asian session high, right? So now we know that the market wants to go for what? The market wants to go for this Asian session low, making this here the drawn liquidity. It did that. After taking that out, if I can look at that, those are what relative equal highs. In spite of just looking at the body, but if you can see the body closed higher than the body of this one here. So those are like relative equal highs. So meaning there's liquidity above this, right? And also looking at this candle here is just standing there alone. So also this is a what? This is an imbalance. If you can look at that. So I know I'm looking at this area of pool of liquidity and this high here, right? So I know the market will be drawn to check out these guys here and this here. But let's say I'm gonna trade using my time zones. Usually I trade what during New York, right? So New York it's 7 until 11. That's the time where I'll be trading. Let me just change this. New York. This is my kill zone where I find entries. So the market did what? The market went and took out this relative equal highs here and taking out this liquidity, right? Did that. Then from doing that, to traced to take out what? This entire liquidity here. Because if we can go to the lower time frames, you'll get to see and understand that the market generates liquidity only to take it out. So making what? If I go up, where's my buy side liquidity? This is my London high. After I want to see, does the market take out this Asian sage? Okay, it does. Then this is my London high. I look for London highs and lows. So this is my London high, and this is my London low. So eventually, I already have seen that the market is what generated liquidity here. London was rated, so I'm gonna go to my lower time frame and see if I can capitalize an entry. So I'm going to go to 5 minutes. Now from 5 minutes, 4 questions that I usually ask myself after this Asian, this liquidity pool has been raided, right? I want to see the second candle. Then the second candle made a lower low, right? Then push to the buy side. So creating what? This fair value. right? Creating this fair value. Let me say, like we're on this candle right now. Let me just do it like, let me say, for example, we're in this candle. Don't look at this. The market just went down and took out this Asian range low, right? After taking the Asian range low, then this candle creates a lower low, right? Forming a what? A fair value. So after creating a fair value, what do I want to see? I want to see, does the market displace to the buy side of the market? Yes. Does the displacement go above the midpoint of this fair value? It did, and went way above. So now I know that this fair value is gonna act as a what? As an inversion fair value gap. It's gonna act as a what? As an infer and as an inversion fair value. So already now I know that when the market reverses, it would wanna go where? Inside this fair value, and inside this fair value is there displacement create a fair value? Yes, it did. This is the fair value. But usually this one requires man um this one requires someone who has experience, who already like has experience and understand like the market, because sometimes man you can never know, man. Like when he does this, someone would think, okay, it broke outside, um a retest, expected to continue to the buy side. So it used this entire inversion fair value as a what? As a rock climber. I want you to see, man, you could have got an entry here in this fair value, or waited for it to create a higher high. Does it display, does it show any displacement to the buy side? Yes, it took out this high here, right? It took out this high. After taking out the high, it went and used this what? The upper quadrant of this fair value as a what? As a rock climber to continue push price up. Went a little bit down to test into this fair value, inside this fair value, inside this order block, and continue to push price to the buy side. You understand? So if we go to the lower time frame, it's crazy, guys. I'm gonna say this again. Now I'm getting tired of even saying it. Look at the body. The body is what? Is playing inside the fair value gap and at the lower quadrant of this inversion fair value gap. What does the wicks do? Seek liquidity. Seek liquidity. So if you can go to the 1 minute time frame. So as I was saying, remember Monday they're only just seeking out liquidity. They are not aiming to do anything. They're just creating liquidity, take it out. Generate liquidity, take it out. You understand? So that's what I knew. I was only looking for areas of liquidity. So here in this fair value, if I were to enter this fair value, right? I want to show you something. If I were to enter the fair value, the 5 minutes fair value, let me say for example, if I were to enter this 5 minutes fair value, right? When I check the 1 minute, it will give me more information that okay, there's also this order block. So meaning now the price might wanna do what? In the 5 minutes, the body might close inside the fair value. However, they might wanna wick it down to this order block. And if I can show you this here, the market plays where? At the midpoint. And if I can add, let me just add 25% and the 75%. So at the midpoint and the lower quadrant of this fair value, what happens is that it went to this 75% of this fair value. I don't know if you can see that, right? It went. So meaning if I was in this fair value here, the 5 minutes fair value, né? And you can see, where is it? I think I'm far. Okay, I already know that the range is just too much for me, right? Like I can't put my stop loss here. It's far. So I use the what? The 1 minute time frame to see if they wanna manipulate, if they wanna try like to manipulate price, and they would wanna manipulate it to until where. So as you enter the 1 minute, the 1 minute shows you that okay, there's an order block below this fair value. So meaning that they might wanna push price to this order block here and continue to the buy side, right? So what happened was they pushed it, and look at when it reaches the 75%, it knows that it cannot go below the low of this order block. So they went to the 75% of it. After heading to the 75%, they created a swing low, went a little bit higher, took out the swing low. As I was saying, so meaning you know that the range is just too much. Your stop loss won't be able to cover this entire thing here. The stop loss won't be able to cover this entire range until here because this is Nasdaq, but hey, it's too much. So I use the 1 minute to at least give me an idea that okay, I don't want price to really like go below this here. So it might wanna retrace and reject somewhere. So as you can see, it went inside this fair value, went below it into this fair value gap, went to the midpoint and played around what, the 75%, created a swing low, generate liquidity. After generating liquidity, you want to see what, liquidity being taken out. After being taken out, you want to see display. Have you ever seen that always after liquidity has been raided, there's what, displacement? You want to see, have you noticed that? So after that displacement, I want to see, is there fair value? No, there's no fair value. However, there's a what, there is a order block. So I know that I don't want this low to be taken out, right? So I know that this order block here is gonna act as my rock climber to continue to push price to the buy side. And if I can take this, yeah, this is a Fibonacci. I usually use I'll show you the settings. Just give me a second. So in this fair value, let me say I'm skeptical, right? I'm like, okay, I don't want to enter when it's a bit farther. So maybe if you are like, okay, I don't want to risk too much, you can put it at the midpoint of this order block and just put your stop loss below and aim for the buy side and look at the body. And also the confirmation for me was what, the body did not close below here, right? It opened here, went below and closed inside this fair value. So also that gives me a confirmation that the market wants to continue to the buy side, you see. So let me say, for example, I were to put my entry at the midpoint of this order block, right? And say I'm risking how much? I'm always risking 5%, right? Which is around here, to make how much? 10%. But already, where is it? Where is the 10%? But already I know that this area was just liquidity being generated, right? You already know that this area was just liquidity. What I like about the 1 minute is that now you get like really like nice entries, scalping entries, the 1 minute, and it's more faster because I want to enter, I want to be filled, then I move out. If I can maybe at least maybe in a trade spend 30 minutes inside a trade or 20 minutes inside a trade. I don't want like it to the whole day I'm inside one trade, and also that I'll have to sleep knowing that that trade higher close, the trade was not filled, so now I have to sleep with my one eye open, so it's not okay for me. So now I know that my first draw on liquidity will be this high here. That will be my first draw on liquidity, making this high here, and my second will be this here, this high here, and my third will be this buy side liquidity. So imagine how much you could have made. So here it made a lower low, right? After doing that, I want to see liquidity. Does it take out liquidity? It did here and went inside this fair value. So meaning this entire liquidity here was generated. I don't know if you understand me. So here it was busy generating liquidity, went to the buy side to take out liquidity, which was inside the 5 minutes fair value. And look at how it played inside the midpoint. If it was consolidating, yet consolidating, then afterwards when it retraced to the downside, I'm not scared. I know that okay, there's liquidity, and below liquidity there's what? My 5 minutes fair value. Created a low, right? And went straight to the midpoint of the 5 minutes fair value, and she kind of like moved a little bit, made a lower high, a little bit, then broke outside, made a strong displacement to the buy side. So for me, also that's a trader because now it broke structure, right? So I'm gonna use what? I'm gonna use the body of this 2 minutes order block as an entry. So the market is always showing you what it wants to do. You understand? If you can't find where liquidity is at, that means you are part of the liquidity. That's why if you found yourself in a situation whereby you enter a buy, ne? It goes a little bit your direction, takes you out, then it's like it went straight for your stop loss, then went up and went straight to the direction which you had predicted that it would like head to, because you didn't know that, hey, but you were part of the liquidity. So it broke out of this 2 minutes order block displacement. Always find out that I'm always talking about what I want to see: displacement. Is there any displacement? Yes. So this retracement here, I know it's a retracement to this order block, and also inside what? The 5 minutes fair value. So I know that this here, it was just only just to take out liquidity. You understand? Actually it's Monday, so Monday I know that they're just aiming to take out liquidity. So from there, the New York, right? I waited for New York. So from there, I already have seen that okay, the market generated liquidity. Let me just take out. So what did the market do? Generate liquidity, generate liquidity, generate liquidity, generate liquidity, generate liquidity. So all of that, everyone is thinking that's what? A support area, right? So after generating liquidity, you would want to do what? Take out liquidity. After taking out liquidity, you take out all the people who bought here out, right? And if they put their stop loss here, it went straight for their stop losses. But look at the body. The body kept on playing. I mean, the body's closed above the sell side liquidity pool. So after that, it created a swing low. Was there displacement to the buy side? Yes, there was a displacement to the buy side, right? After there was a displacement to the buy side, I would wanna see price coming to this low here, because this is just too much. I can't enter trade here. It's too much for me. So I would wanna wait. Okay, it did that. So when I see this high being broken out, and it broke outside that high, reacting into this um bearish order block, right? Made a higher low, a lower high, took out liquidity, but the board was still above this low here, right? Then it was a displacement to the buy side. Yes. Then it gave me a what? A fair value. So that already shows me that okay, this is a key area for me. I would enter a buy here, right? And making one more draw on liquidity, making this the relative equal highs here, this accumulation here as my draw on liquidity. It did that. I'm just showing you that there are like a lot of trades in it. But even if you just got yourself that one trade, this is what they mean when they say a market maker buy model. Accumulate, manipulate, distribute. Aiming for what? This one here. This is a market maker buy model. Imagine, bro, just one trade. You can one trade a day. You don't need to trade 5 times, 4 times, 10 times. Just one with consistency. You understand? So let me just not talk a lot about that. I wanna go to Tuesday. Let me talk about Tuesday. Right, and already we see that price is pushing down to this sell side liquidity. So let me just change this. This is my previous day's low, and this is my previous day's high. Right, and remember, this is my drawn liquidity. I'm looking at this liquidity here. So as it's going down, since the market is bullish, is bearish really. Sorry, it might want to create the low of the week. I think I removed some key things here. Hey man, hey, this was the fair value. This was the 1 hour fair value gap I was talking about. Remember, and this is the order block, right? It's just below it. I think so. The market might be drawn to take out this previous day's low, and into this fair value, and make the low of the week to push price to continue higher. So the market might, I'm not saying it will. This is what I would love the market. I would want to see the market doing today. Because as you can see here, there's a lot of liquidity, man, resting above this here. A lot of liquidity. So they want to finish up. Oh my god. So they want to finish up here, then use this fair value as a rock climber to take out all this liquidity. I'm not saying it will, I'm saying it might. Remember, this is forex. We're just predicting what might happen. You understand? So I'm gonna go to my 15 minutes time frame. So currently, I like what I see. 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 I would, if Tuesday today gave me a lower low, and displays to the buy side, that would be nice. That would really like tell me that, you know what, we really are pushing to the buy side. So yeah, I'll keep you updated. Cheers. So my what I wanna see happen today, I wanna see, does it, just give me a second. Let me just take out these things here. So what I would like the market to do for me today. So what I would like the market doing is retracing to this area here, inside this fair value, then use this as a rock climber to continue up. That's what I would like the market to do today. We don't know. Remember, this is CPI week, man. The market is highly manipulated. So cheers.